I'm sharing my screen. Just let me know if you can see my screen. Can you see my screen?
Yes, please, I can see.
All right, great. All right, I'm gonna start the review now. I had a few meetings this evening, so unfortunately, I couldn't make it the 9 p.m. that I promised earlier in the day. But it's not too late. I'm still going to do the market review for tonight. I would take you through. I've not looked at the chat actually. I think I looked at the chat on Friday when the markets closed, but I haven't looked at the chat today because I want to give you I want you to walk I want to sort of give you a feel of how I look at the market whenever I am trying to look at my weekly analysis, so you can have a firm understanding, because sometimes when I've already looked at the charts and I'm going over it again, I'll miss certain things because I've already done them. All right. So I thought this would be one of the best ways to go over my market analysis with you all. All right. So
Yes, please.
I'll start from DXY. So ideally I'll start from my DXY. And as you know, I trade mainly Euro USD and GBP USD. And I have my DXY here, which is a point of interest that I would like to see. Right. Okay. Now this is no longer valid. What is here because I indicated earlier. I think that was last week, 22nd of August. So okay, 22nd of July, that I was expecting price to go all the way to this fair value gap, but that's already been done now. So that's no longer necessary. From where I stand, the market is actually very clear. Honestly, it's given some very nice indications that I like to see, and we're about to go over that now. We're about to go over that right now. So ideally, whenever you look at the market, the first thing you want to start with is uh the calendar. All right. You want to ask yourself, what's the economic calendar looking like for this coming week? Why? Because the economic calendar gives you an idea of how the kind of market profile we are bound to see. What do I mean by market profile? Going into every week, the market has certain characteristics. Even on every day, the market has certain characteristics that it could display. Think of it like the emotions of the market. Anytime if as a son, if you wanted to ask something from your father, you need to understand your father's emotional state at the time that you're asking. Many of the times you don't really think about it as much, but if your father is very angry, that's just not the right time to ask him for something. If your father is in a happy mood, that's the time to ask him. The same way the market also has certain phases. Every week is different, and every day is different. Every day has its own market profile that it will be important for you to understand. So by looking at the calendar, and every trader should be looking at the calendar. Every week, you should be looking at the calendar, and every day, you should be looking at the calendar to understand what the market is likely to do and the time that news releases are likely to come out. I don't look at the economic calendar as a way to enter my trade. All right. Those are fundamental traders. I am a technical trader. All right. So I don't look at the fundamentals
House
to
to
I don't look at the
I don't look at the fundamental.
fundamentals. Someone's thing is okay. I don't look at the fundamentals in order to enter my trade. What I use the fundamentals for is just to see how the market is going to be positioned this week. That's it. So I can see that on Monday we have ISM news, and I look mainly at the red folder news events that affect the currencies I trade. So this week we have a very calm week, but which makes the week even more beautiful because it it has a lot of potential because the week is so calm. So Monday we have ISM services PMI, which is coming out at 2 p.m. Tuesday, we have no red folder news. Wednesday, no red folder news. Thursday, we have unemployment claims that will come out at 12:30 p.m. All right. And Friday, there's no news at all. What does this tell me? Personally, this tells me that we are likely to have a lot of movement at the beginning of the week because there's no news at all on Friday. So we're likely to have more movement at the beginning of the week. How does it affect my trading? It doesn't affect my trading in any way. It just gives me an expectation psychologically that I like to look at whenever I'm entering the market. So now let's head over to 1 second. All right. So now let's head over to the chart and let's do some analysis, which is what we all came here for. At the end of every week, you want to look at the month. At the end of every week, you want to look at the weekly charts. At the end of every month, you want to look at the monthly charts. At the end of every day, you want to look at the daily charts. But since the week just ended and the month has already begun from last week, right? I already have my analysis on the monthly charts, right? But moving into the weekly charts, which is since we are going into a new week, I'm interested in seeing where does the market look like it wants to go towards. All right. What's the market saying? What's the market saying that it wants to go towards? So let's look at DXY. Let me just clear all of this. All right. So looking at DXY over here, what I would like to do is you can take a pen and a sheet of paper, and this is what I usually like to do. I like to write DXY weekly, daily. What is my bias on the weekly and the daily? When I look at the weekly, because we are doing top-down analysis. So when I look at the DXY on the weekly, where do I think the market is going to go? When I look at the XY on the daily, where do I think the market is going to go? All right. So I analyze the time frames because by doing that, it allows me to drop down and have a very clear structure on the direction I'm thinking that the market is going to go. So when I look at, so let's have the XY. So let's have the XY. The XY on the weekly, what do I see? This is a weekly chart. What do I see? I see that price has generally in a premium and discount. Those of you who were at yesterday's seminar, Kema spoke about premium and discounts. So looking at a premium and a discount level, you can see that in this price range that I've just drawn, price is generally in what? A discount, which means that we are more susceptible to buys. All right. We are more susceptible to buys, but that's just one side of it. We don't just look at that and decide that we are buying. No, we have to now start to read the actual candlesticks. It's just good to know that we are generally in a discount. Knowing that we're in a discount, I want to start reading the chart itself. Generally, what trend are we in? Are we in a bullish trend or are we in a bearish trend? It's a little difficult to see when you look at the chart just like this. Why? Because here it looks like we're going on a downtrend. Right from here, it goes down, it goes up, it goes down, it goes up, it goes down, but it breaks the market structure. All right. For those of you who are in the main class, you know what this means, right? But it breaks the market structure, or we have a market structure shift. It breaks it comes up all the way here and it drops down here. Now, this what just happened here is what we call a classic market maker buy model. So if you don't know what a market maker buy model is, you can just Google it. It's called MMBM, market maker buy model, or MMSM, that's market maker sell model. But what we are looking at here is a market maker buy model where market comes, it breaks it, and it comes down here as a confirmation. What do we see in this particular confirmation over here? I'll start going faster when I'm going to the EU, because some of these things it's easy for me to spot with my eyes already, right? But I'm just trying to go through it so that you can understand what I've already seen in the market and why I'm analyzing things the way I'm analyzing. All right. So we have price come to the very last fair value gap over here to confirm this as a bullish move. All right. So I explained some time ago that whenever you see price go all the way up here and it drops down, you want to see price rebalance at either a fair value gap or an order block. And here we have both of them because this yellow candle, this thick yellow candle here is an order block. We have price rebalancing in a fair value gap and in an order block. Now, price begins to push up from here. All right, so we know that price is now making its way to the top. As price begins to push up from here, making its way all the way to the top here, it fails here, it drops down, and where's my low? My low ideally should be here. I can have my low here, but this is just a one candle low. So this is more of a more confirmed low than this one over here. All right. So we have markets pushing all the way up here. It comes down, it drops, it goes up again. And guess what? It drops. It goes up again and it drops. It drops into this fair value gap and closes in this fair value gap. It closes inside this fair value gap. Now, what is my expectation now? The way market has closed beyond this fair value gap, price is likely to go to the downside. All right. We are likely to see some expression to the downside. And if possible, keep going up. That's a possibility. But that will depend on how this week's candle closes on the DXY. But DXY is generally looking bearish because of that strong close below the fair value gap. Because of that strong close below the fair value gap. What does that mean? If DXY is looking bearish, it means that Euro USD is going to buy. GBP USD is going to buy. But generally, that strong close below the fair value gap means that price is looking to go to the weekly sell side liquidity. So let's go over it again. All right. Let's just go over it again. I'm giving you the things I am looking at. So price over here, we have our fair value gap that I showed you. Price begins to make that upward movement. And once price begins to make that upward movement, what are we looking at? We are looking to see price go over here. But price comes in here and it fails. It fails over here. It drops down. It comes over here again, fails over here, and begins to push down. Now, just by observation, I'm sure you can notice that the sell candles, which is the yellow candles on my chart, are generally thicker than the buy candles. All right, I'm just saying this for you to observe. Now, my sell side liquidity, I have one over here. Let me push this sell side liquidity here so that you can see it more. Send backward. All right. So let me bring this sell side liquidity here. You can see it even more clearly, right? Over here. This is my first sell side liquidity and my second sell side liquidity. This first sell side liquidity was taken. All right. It was taken. It was taken. And this fair value gap, right, has also been taken. It has been invalidated. In other words, price did not use this fair value gap. So what am I looking at? Price is more likely, and I've explained this thing several times. Whenever you're looking at price usually does just two things. Price usually does just two things. Let me see if there's anyone from my class here to see if they can explain it to me. All right. I have Aseye, I have Derek, I have Karim, I have Richard. So, okay, good. So all these four people, I think, okay, Joe too is here, which means you guys can answer these questions. Price moves from what to what and rebalances at what?
Liquidity to liquidity and
okay, so say the whole thing for me. Let's go. Joe.
Liquidity to liquidity and rebalances at fair value gaps.
Good. So price moves from liquidity to liquidity and it rebalances at fair value gaps or other blocks, right? But so looking at what price has done here, it has taken out the liquidity here. In this fair value gap, did it try to rebalance? Did it rebalance in this fair value gap? No. it did not respect that fair value gap. It closed, it's in fact was so bearish that it closed beyond that fair value gap. Right? So now what are we looking out for now? What's the next thing? It's going for liquidity. So our next expectation of price is that price is going to come all the way down here. It can come here and retrace over here. That's fine. Or it can come here, do something like this, and keep going down. And if it starts going down, what's the next place? We are looking at another rebalance, which is over here, a fair value gap. If you can see it, that's another fair value gap. But for us right now, we are looking at the coming week. So that fair value gap is not important to us. Okay, that fair value gap is of no importance to us. What we are looking for is, where is the market going this week? Because every week when the market is done, we will look at the market and decide that did the market do what we wanted? Did the market fake us out? Here we have a very clear sign that the market wants to come to this liquidity. We are in a very sweet spot in the market now. The market wants to come to this liquidity. It's very clear. Let's go to the daily and let's see if we have the same thing on the daily. All right. So on the daily, we can see that price is generally in a bearish trend. That bearish trend is even easier to spot now. I hope you can see it. The bearish trend is easier to spot now. Why? Because you can see price going down here. It goes up, it goes down, it goes up, it goes down. It comes all the way up here, and guess what happens? It begins to drop again, making another series of higher highs. Sorry, lower lows and lower highs, lower lows and lower highs. It comes all the way up here. And if you saw the very first time I opened this chart, I had indicated that I was expecting price to come up to this fair value gap. Now, price dropped below here, all right, took out this liquidity, all right, took out this liquidity. I remember what Joe said. Price goes from liquidity to liquidity, and the rebalances are fair value gaps. So price came down here, took out liquidity here. Where's the liquidity? Let me zoom in so that you guys can see a bit well. Where's the liquidity? This is the liquidity right over here. All right. That is the liquidity that we're looking at here. So price comes down, it takes out this liquidity, and what does it do? It rebalances our fair value gaps. So it goes up all the way here, and what does it look for? It looks for a fair value gap. This is our daily fair value gap, which is nested inside a weekly fair value gap. So if I go to the weekly, you see that there's also another fair value gap there. So this is the weekly chart. So this fair value gap on the weekly, we come to the daily, also has a fair value gap, and price goes all the way into that fair value gap, respects that fair value gap, and keeps dropping. I say, can you see what I'm showing you guys?
Yes, Mr. Billy, we can see.
You can see it, right? Because this is all I'm referring, because these are things I've taught you guys in the class. Yeah. So price comes up, it rebalances itself, and guess what happens? Last week, rebalances and begins to drop. Rebalances and just begins to drop. And in its drop on Friday, that was NFPD, it dropped and closed extremely bearish, taking out this liquidity, dropping below. So the next thing I'm looking for now, please, because the market has already opened, exclude the candle, the very last candle, in anything I'm talking about today, because the very last candle is representing this week or today. All right, that's the very last candle. So we don't need that particular candle because we are reviewing our last week. All right. So immediately, the next thing I can see, which I want to be conscious of, and I like to clear my chart sometimes. So over here, I'm gonna clear the things I don't think I need anymore. I'll clear this. I'll clear this. I'll clear this because these are no longer relevant. It's just for you guys to see. But these are no longer relevant to me. So price is currently here. I'll clear out my liquidity zones. And now I start to look again. Where is my next form of liquidity that I'm looking at as a trader? Here. All right. This is what I'm looking at. I want to see, I see a daily sell side liquidity. All right, so immediately I just label my daily sell side, and we can see that price has just taken that daily sell side. The next thing to also look at is I have a daily fair value gap over here. I hope all of you can see that daily fair value gap. So I have that daily fair value gap, and within that daily fair value gap is a daily sell side liquidity. So price has just taken liquidity. All right, price has just taken liquidity, and in it we also have a fair value gap. What does that mean for me? Like I said, just like on the weekly, price looks very bearish. Say, Dave, please, could you help? Let me remove your annotation. All right. So just like on the weekly was what? Bearish. Weekly was bearish. What do we have on the daily? Daily is bearish. So just like that, I have established where I think that the DXY is going to go. I am drawing my zones because these zones are of importance for me to know where price is at when I am trading on the 5 minutes. So I'm never trading blind. You see, I'm never trading blind because when I look at the price on the 5 minutes, these zones that I have drawn, when I go to the 5 minutes, they will still show. So when I'm entering a trade, I'm always thinking, am I in a weekly zone? Am I in a daily zone? Because mind you, whenever price enters a higher time frame zone, for example, if you're on the 5 minutes and price hits a weekly zone, price is more likely to react from that zone. Price is more likely to react from that zone. So let's go to the Euro USD, and we are just going to do the exact same thing, guys. What am I doing here? All I'm doing is establishing a bias. I'm establishing my bias for the week. What do I think the week is going to do? And this is extremely important. So let's go to the Euro USD. Some of the best trades you can ever get, and I'll tell you this, some of the best trades you can ever get is when you have the direction you have for DXY is the same direction you have for Euro USD. It's the same direction you have for GBP USD. when you have price aligned like that, it means that price is ready for you. It's ready for you. Those are high probability moments in the market. Those are the kind of markets you want to be trading. You don't want to be trading when you don't know what the market is doing. Remember what I told you guys. A consolidation is a trader's worst enemy. All right, it's a new trader's worst enemy. So once again, we start from the weekly charts. Now I'm going to go a little faster over here. All right, because I know I've gone pretty in depth with the DXY, and I'll publish this video so that I'll publish this video and I'll send the link so that anyone who wants to refer to it and just watch it again, you can go back and watch it again, and feel free. All right. So on the weekly chart, we can see that once again, we have price in this general range where price seems to generally be tight. Now, price comes down here. All right. It goes up, it drops down, it goes up, it drops down. Now, from here, price goes up, takes out the liquidity resting over here. Let me shift this slightly for you to see. It takes out the liquidity resting over here. This is the liquidity it takes out. It takes this out and it drops. Now, as it's dropping, the only thing I'm thinking about is price going to go to liquidity or price is going to rebalance at a fair value gap? Listen, I told you guys this, especially those who are in my class. I told you this. If you can catch this thing, always ask yourself this question. Is price going from liquidity to liquidity, or is it rebalanced at a fair value gap? Because that information is so vital to you. It will tell you where the market wants to go. It will tell you where exactly the market wants to go. Does it mean we are going to be 100% right? Not really. Sometimes the market will fake us out. right? The market will fake us out. It will give us, it will tell us that, oh, it's going one direction and go the other way. It happens, but it doesn't always happen. All right. Most of the time, you will be accurate if you can read a chart like this. So if you look very closely, I'm going to just shift my buy side liquidity here. All right, because that's the one I'm looking at right now. So price takes out liquidity over here. After taking out this liquidity, the next question I'm asking myself is, what does price want to do? Because if you look at this candle that was formed after price took out liquidity, this is what we call, some call it a shooting star, some call it a hammer. But this is a candle that shows a clear rejection after price has taken out liquidity. So now I'm asking myself, is price going to go for liquidity? If price is going to go down and go for liquidity, where would have been my next liquidity? Here. Over here. That would have been my next liquidity. That's if price wanted to go for liquidity after printing this particular candle. Immediately, I'll be thinking, so price is either going down here or it's going to rebalance at what? A fair value gap. Where's the fair value gap? Here. This is the weekly, guys. This is the weekly. Price always moves from liquidity to liquidity, or it rebalances at a fair value gap. And as I've explained to you guys, for those who were not probably in that class, I said if a fair value gap is rejected off, it means that price has respected that fair value gap. And you can see that in last week's trading, price entered that fair value gap and gave a clear rejection of it. Now, for those who were not looking at the charts last week, this entire rejection that you just saw here is an extremely bullish rejection. Why? Because all that rejection happened in one day on NFP. And one day on NFP, and you see it when I go into you'll see it when I go into the daily time frame. So what is my expectation now? My expectation for this week is price will most likely drop down slightly as price usually does, because you never see a bullish candle without a little wick at the bottom, right? So price is usually going to drop down slightly, and then it's going to go for this buy side liquidity. So this is my lowest hanging fruit. So it's going to go for this buy side liquidity and then most likely take out the particular one here. So what does that mean? Once again, I take my pen and my paper and I write Euro USD. Weekly charts. What am I? I'm bullish. Now remember, DXY and Euro USD are inversely correlated. What does that mean? It means that when DXY is bearish, Euro USD should be bullish. All right. Euro USD should be bullish. And DXY is also inversely correlated with the GBP USD. So when DXY is bearish, GBP USD should be bullish. And if you are writing what I said down earlier, all right, let me just mute. All right. And if you're writing down what I said earlier, on the weekly charts, all right, on the weekly chart, DXY was bearish. On the Euro USD weekly, DXY, Euro USD weekly, what do we have? Bullish. So that means price is going in the same direction. That is good news for us, guys. We want that. That's what we want. All right, that's what we want. So let's go to the daily and let's see if we have the same thing on the daily, which we most likely will have. On the daily, what do we see here? We see price takes this liquidity. All right, it takes this liquidity right over here. That's what we have coming up here. We have a fair value gap over here. That fair value gap is disrespected, it's going down. But guess what? This is an entire swing. This entire leg, right from, let me draw it so it's easier to see. All right from here, there's an entire leg of price. So if price disrespects the first fair value gap inside here, no worries. We are looking to see, is price going to respect a different fair value gap? And if you look closely, you can see it that it did. Price comes all the way in here. It respects the fair value gap. It respects that daily fair value gap. It touches the daily fair value gap and rejects it. As it is touching the daily fair value gap, it's also touching a weekly fair value gap and rejecting as well. So what am I expecting now? I'm expecting price is going to be bullish. Price is going to be bullish. Now, same thing. Price might most likely come down before it goes up. But I'm not looking to take sales. All right. As a newbie trader, a time is going to come where you'll be able to both sell and buy in the same week, knowing where you should sell to and knowing where to buy to. But as a newbie trader, I'll tell you this: what you should focus on is focus on the direction of the weekly candle. Could the markets go down before it goes up? Yes. But as far as you are concerned, you are just looking for buys. So this week, all I am looking for this week is buys. So my bias for the week is bullish. I'm bullish on Euro USD. Bullish to which point? Same thing I showed you guys on the weekly. I'm bullish for price to come down slightly and take out this. This is my zone. This is what I'm looking for. Probably drop down a little and come back here. Why am I drawing price like this? Because remember, guys, price does not move in a straight line. If price is going to go up to the very top, it's not just going to get up and go up there like that. It's going to go up, retrace, go up, retrace, go up, retrace. That's how price usually moves. So this is my call for Euro USD on the daily as well. So I'll write that down. Daily. Daily is equal to bullish. So now you have daily aligning, weekly aligning. And for Euro USD, sometimes I like to go down to the 4-hour charts. But what I'm seeing over here is enough for me personally. It's enough for me personally. But when you look at the 4-hour charts, you can see more fair value gaps formed over here. These fair value gaps for me currently are not the ones I'm going to be concentrating on. But I'm just calling it out for you guys to see, right? We have more fair value gaps here, which means that price could potentially retrace and keep going to the top side. But the most important thing is that I am still bullish on this. The price is going to keep going up. Why? Because on the higher time frame, starting from the weekly, price rebalanced. Okay, I'm bullish because price rebalanced on the weekly, a rebalance on the daily, a rebalance on the weekly, and a rebalance on the daily, indicating to us that in this situation, price was not going from liquidity to liquidity. In this situation, price was rebalancing on a fair value gap to keep going back in the same direction. Right? So now price is going back up to this weekly buy side liquidity. From this buy side liquidity, we have another buy side liquidity resting right above there. So I'm bullish on the weekly of Euro USD. I'm bullish on the daily on Euro USD. Let's see what GBP USD has to offer to us. So we come to GBP USD. Same thing, same concept, nothing changes. Same concept, nothing changes. I mean, by now I've gone over it a few times, so someone should even probably be able to analyze the charts for me, right? But don't worry, I'll still go through it. I'll still go through it with you guys. Don't worry. I'm not going to put anybody on the spot here. But just looking at this, we can see that where's my liquidity? Let me remove this 1 second. All right. Where's my liquidity? Where's my liquidity that was taken? Here. Same question that you're asking yourself, guys. It doesn't change. That's when hold on. That's weekly. All right. That's my weekly buy side liquidity. So over here, price takes out the buy side liquidity on the weekly. After taking out buy side liquidity on the weekly, what happens? The next question I'm asking myself is, does price want to rebalance or price wants to go to the other form of liquidity? Looking at my chart, after price takes out on this particular blue candle, after price takes out liquidity, where's my other liquidity zone? Where's my closest sell side liquidity? Right over here, guys. Right over here. This is my most recent sell side liquidity. So once price takes this out, price could do one of two things. It could either come down over here and take this liquidity out, or it could rebalance at a fair value gap. All right. Now, looking at how price reacted last week, price came down into the fair value gap. And as you can see, it took out the fair value gap completely, literally to the tick. Literally to the tick, guys. Literally to the tick. And then retraced and rejected of that fair value gap. So what's my expectation? Bullish, because it means that price wants to rebalance. Price is not going for liquidity. It chose to rebalance. So what am I looking at for this week? For this week, I'm looking at price going all the way up here to this weekly buy side liquidity right on top here. So I'm expecting price to drop down slightly, probably find more support on this fair value gap and start going up. But guys, I am not going to be selling. I know price might drop down before it goes up. I'm not interested in that drop down. I'm only buying. Doesn't mean I will not take a loss. I could take a loss on Monday, but the fact that I take a loss on Monday does not mean I don't trade. I'll still trade. If my entry criteria is presented, I would enter. All right. If my entry criteria is presented, I would enter. So I look at this like this price has just rejected of this fair value gap, indicating to me that price wants to keep going up to the top. And I tell you this particular week, if I get a very nice entry, especially on Monday, I might actually ride out this particular week's trade as a swing trade if I get a very nice entry. All right. Of course, I'll take out 90% of my 90% of my lot size once it hits my usual target. All right. And then I will swing trade the rest of it. All right. It's not something for you guys to do. I'm just telling you. So if you see me doing it, just know that I said it before. Right. But I would want to swing trade this all the way to the here, especially on GBP USD if I get a very nice entry, because GBP USD has more potential for the upside from what I'm seeing on the weekly. We come to the daily. So we'll take a pen and paper once again and we'll write GBP USD weekly. What are we expecting? Bullish. Daily. What are we expecting? Let's look at what the daily has for us. So on the daily, once again, back to the same principle. The principle does not change. Where was liquidity taken out? The most recent liquidity that was taken out is over here. Let me show it to you right on top here. This is the most recent liquidity taken out. There's that liquidity that is resting over there. It's our daily buy side liquidity. And we have another one. Give me a second. I'm trying to copy this. All right. And we have another one resting right over here. I'll zoom in so you guys can see it because I think it might not be very clear to what I'm looking at. All right. So we have another liquidity zone resting right over here on top of that particular week. On top of that particular week, we have another liquidity zone resting right over at that side. Now, once again, same questions. What are we expecting? Is price going to go from liquidity to liquidity, or price is going to rebalance at a fair value gap? So knowing that this is my liquidity that price just took out, where's the next liquidity? Right over down here. This is it. But in between price going from that liquidity, right, in between price dropping from this liquidity zone down over here, is going to encounter fair value gaps. So the first question I begin to ask myself is, which fair value gaps could it be trying to rebalance, or other blocks could it be trying to rebalance at? The first thing I see is this. I have another fair value gap in there. The weekly fair value gap, I know some of you are seeing it. It's already been drawn. That's why I'm not going back to refer to it again, because we already spoke about it when we're talking about the weekly cycle, right? Now, price comes all the way over here, drops into this zone, touches the daily fair value gap, and rejects off it. What does that mean for me? It means that price is most likely looking to be bullish. and I'll be riding it all the way to the top here. If I get a very nice entry. If I don't get a very nice entry, I'm fine. But that is what I'm looking at. So I take my pen and my paper and I write GBP USD what? Bullish. GBP USD bullish. And I just called out my bias for the entire week using very simple things I know I've taught in the class multiple times. I've taught everybody this. I've taught this when I was in my free class. I've taught this in the DTT 250 minimum $250 deposit class. So everybody has had the opportunity to have experience to this. So this is what I'm looking at for the week. But listen to this. I don't mind if I take a loss on Monday. I will still be trading on Tuesday if I have the opportunity. All right. Yesterday, I said something during the seminar. I said day trading is not everyday trading. I will sit on the chart. If the chart gives me an opportunity, I'll trade. If that opportunity leads to a loss, I don't mind, because it is more about the process of being disciplined to be behind the chart than it is about whether I made money or not. But I'll tell you this, guys, ensure that when you're in the market, you are risking. Well, depends on how much you want to risk, but make sure you're risking money that you can afford to lose. All right. Make sure you're risking money that you can afford to lose. Ideally, your risk parameter should be between 1% and 3% of your account total. If you're risking more than that, I think you might fall into a bit of an issue if you don't take care. All right. So risk between 1 to 3% of your capital. But that's about it for today's market recap. I've said everything that I want to share with you guys. I'll post the video. If you have to go and rewatch it, you can rewatch it, but there's an analysis. So this is the analysis for the direction of the market. If you want, after understand the direction of the market, you can then use whatever trading strategy you want to use. Trend lines, OTE, what's the other one is there? Bulls and bears, flags, double tops, double bottoms, ICT. It all depends on you, but you need to understand the daily bias. You need to know the direction you are expecting the market to go. And for me, I'm expecting the market to go bullish. I'm expecting the market to go bullish on Euro USD and GBP USD. But that's about it for today, guys. I'd like to thank all of you for joining the class. And guys, stay sharp and stay safe in the market. Thank you, guys, and have a good night.
Thank you, sir. Thank you very much, sir.
Thank you.